I think we are seeing an emergence of a new asset class based on blockchain technology, and we have an opportunity to make changes to our legacy financial system, which we will feel for years to come. And some of the initial steps and investments in that space have started with Bitcoin itself as the first one back in 2009. But we're now seeing blockchain applications move throughout our economy, and I think that we will see them really permeate how we do pretty much every part of our lives. Most of it will be behind the scenes, and people won't realize that blockchain is being applied to what they're doing in their everyday lives, which is really kind of the end goal. Most people don't realize how the internet works or cell phones work behind what they do and they use on their phone, but this is a really important technology. I think as people look at Bitcoin specifically, it does have a separate use case, which is different from a traditional investment as people might think about it. Bitcoin has a number of characteristics which can be compared with gold, some of them being anti-inflationary. Bitcoin has a fixed supply. So when we think about US dollars and we think about the government issuing a continuous supply of US dollars, or any country that issues its own currency, Bitcoin does have a hard cap of 21 million Bitcoin that will ever be mined. So we do think about this as an anti-inflationary type of transaction. Another is more of a larger view on kind of how we hedge against government policies. Doesn't matter whether it's Republican or Democrat or any other whoever is in office. It's really as our U.S. government and global governments expand money supplies and their reach through society, people do view Bitcoin as kind of a hedge against that. When we move to other digital assets, we look at things like Ethereum, which are really the base layer for blockchain technology or applications or dApps that are built on it. And that becomes the highway, kind of the next internet, so to speak. But they take a toll. And so the opportunity to monetize something like that is real. So there are use cases for blockchain that do involve financial transactions and allow investors to build models on how to value Ethereum. And then we move on to other digital assets, which certainly are trying to replace existing technologies within our society, whether it's various use cases in data transfer, whether it's use cases, data transfer being the main part of it, but what is that data that's being transferred? So I think there's a lot of interest, there's a lot of skepticism, and that's where opportunity is created when you have a very small percentage of investable universe that even understands digital assets. That seems like an opportunity. So I think that we will see a lot more of this going forward. We'll see a lot more applications of it, and we'll see a lot more of it in the press going forward. Stablecoin is a digital representation of stable value. So in this case, we refer to stablecoins being one-to-one backed by dollars underneath them. So a typical stablecoin issuer, we'll call it Circle because they're the largest in the United States right now. If they have 100, every time somebody mints $100 of USDC, Circle goes out and buys $100 worth of short-dated treasuries. So every dollar of US or every USDC that is outstanding is backed on a one-to-one basis with a short-dated dollar-denominated instrument underneath it. And so what that does is it creates a digital twin of a dollar that can be moved across the blockchain much more efficiently than some of the current technologies that are out there. So if we think about sending a wire right now, the ACH process could take anywhere between 1 and 3 days to clear when you initiate a wire between yourself and another entity. Using USDC, I can send you USDC instantly from my wallet to your wallet in a peer-to-peer transaction that should settle within seconds. So the concept of moving a dollar-denominated asset across the internet and across the globe instantaneously with no friction from intermediaries is really appealing, especially to investors and people who are involved in the digital asset ecosystem. You also have countries that have high inflation, and so people don't want to hold their own currency because of either devaluation or other factors. So you do have demand for holding a digital twin of the US dollar. And the question becomes, how do we regulate that? And I think the initial stable coins that were issued, Tether being the first one of them, had no regulation on top of them. And so there was no accountability for, do they really hold all of the assets that they say they do? Circle is regulated by the U.S. and has to verify that they hold assets that back their stable coins one to one. And so again, you start to build trust in, can I send this dollar of digital dollar, and does it actually mean it's a digital dollar? So what we've seen recently is regulation coming through with the Genius Act that will help put a regulatory infrastructure on top of stable coins in the United States. Who can issue them? What are the regulations for issuing them? What has to be held behind them? All of those things had previously been unaddressed by previous administrations. And now that we have a clear guidance to move forward, I think you'll see more prevalence of stablecoins. Um, do we need to have 50 stablecoins, one issued by each bank? I think the market will sort that out. But at the end of the day, I think the ability to digitally move dollar value across the internet at the speed of the internet itself is really important, and it'll be important for transactions. But at the end of the day, it'll also be important for collateral. And so, as we try to move collateral through the financial system, there are always hangups here and there, especially moving cross border. Once you can have stable coins as good collateral, you now open up the financial ecosystem even further than it is right now. And so we will see certainly a lot about stable coins. People will understand them, but it's also important to understand that stable coins are not necessarily an investable digital asset that's going to go up in value. A stable coin should and always should be pegged to a dollar or whatever currency underneath it. There will be euro denominated stable coins. And there may be British pound denominated stable coins. The point being that there is a stable currency underneath of that digital twin. There are a number of things behind that, which I think speak to part of the regulatory infrastructure in the United States. And certainly digital assets are a global phenomenon, and they're not relegated to the US only. But in terms of regulation of digital asset markets, the US has been very far behind, with Europe, the Middle East, and even Asia already leading in terms of how they regulate the trading of digital assets, how they treat digital assets, how they account for them on balance sheets. So the US has lagged behind that materially, some of which was attributable to previous administrations not really understanding it. We don't want to make this a political discussion, but the current administration has really taken the reins off of the digital asset ecosystem here in the United States and enabled it to start to grow again. And some of the things that they've done, rolling back SAB 121, which prevented banks from holding, touching, and really transacting digital assets. They've dropped most of the lawsuits against the dealers in the space, and they're moving forward, as we've seen with the Genius Act, and a number of other initiatives to make digital assets more feasible, palatable, and investable in the United States. And so this kind of um, how do I want to say it? Just kind of confluence of factors, which finally allows the investable community to really understand, hey, these are here to stay, and we should be taking a look at them. Another factor was the launch of the Bitcoin and Ethereum ETFs last year. Bitcoin back in January, Ethereum back in May. That has allowed regular investors who have brokerage accounts to participate in the price action of certain digital assets, which again sparks interest. So now we start to create demand. I don't understand Bitcoin, but I think I should have it in my portfolio. Great. You can buy an ETF wrapper and you can put some in, and you can understand now, and you can see a price action, and you actually are able to have access to price movements of digital assets without owning the underlying digital asset. So we had those two come online last year. We actually have a number of filings for other token ETFs, Solana and XRP, which are moving through the SEC registration process right now. So we have seen a groundswell of interest, both in the ability for investors to access the market and from the government to not only take off the reins, but really kind of push forward on regulation. And if I'm thinking about the investable universe of assets in the world, this is one that's emerging and is becoming more investable. And then the third thing that I would focus on to some degree is really kind of very specific to kind of Bitcoin, Ethereum, and some of the other majors, is you've seen this cottage industry of what we call digital asset treasury companies that is popping up. The first one, which most people should have heard of by now, is MicroStrategy, with Michael Saylor having taken the company and really turned it into a Bitcoin treasury company. And the sole purpose of that company is to really buy Bitcoin and hold it on their balance sheet. And they issue debt securities, they issue equity securities, and they use the proceeds to buy Bitcoin. So if you think about MicroStrategy as a Bitcoin holding company, we are now seeing that expand. I think there are over 100 Bitcoin treasury companies at this point. And now that is moving into Ethereum, which is part of the reason why we've seen the price action of Ethereum has been very strong in the last couple of months, because we've seen the investor base in the traditional equity world is now accessing these types of treasury companies. And so we've seen Ethereum treasury companies, we've seen Solana treasury companies. And so these are basically similar to the ETF. These are ways for regular investors in their brokerage accounts to access price action in these underlying securities. However, these treasury companies are taking a slightly different approach from the ETFs. They are using equity and debt issuance to buy and hold these assets underneath. So we've seen a groundswell of demand from digital asset treasury companies that is definitely helping price action. So combination, if I were to sum it up, would be government regulation in the United States has paved the way for more people to get in. ETFs have paved the way for more people to get in. And then you have demand, purchasing demand from some of the digital asset treasury companies. So I would certainly lead with keeping an eye on these digital asset treasury companies. I think that, we look at Bitcoin and like I said, there's 100 of them at this point. MicroStrategy is certainly the biggest one in the space. Metaplanet over in Japan is one of the larger ones. That is something that people need to keep an eye on, which is what are these companies doing? Are there more of them? So when we look at Solana, we look at some other token and treasury companies, the pipeline is really strong for them. I think we see announcements pretty much every day in terms of a new company raising money to buy digital assets. That's a trend that I don't want to be on the other side of. So for now, that is a very strong tailwind. I would continue to look at government regulation. We still don't have true clarity on what is a digital asset. Is it an equity? Is it a commodity? Obviously, the CFTC and the US government has acknowledged that Ethereum and Bitcoin are commodities. I do think further clarity from the government on what they consider a digital asset to be will certainly serve as a tailwind. And then I think you also have two other factors. One is actual just innovation, pure technology innovation. We look at the internet back in 1995 through 99. That internet, which was really just pushing data back and forth. It wasn't very usable. We weren't doing commerce. We were just looking at websites. So the early internet, what it was back then versus what the internet is now, has changed dramatically. And I think that you're going to see a number of blockchain technologies that are moving in that direction for making, things in our everyday lives that are not on blockchain moving forward with that. So you'll see a rash of new technologies come forward, which will be great. And then I think you just also have to look at Bitcoin itself specifically as a safe haven from global economic instability. We certainly have a lot of things that are going on globally that people are wary of. Certainly some great things, but also certain things to be concerned about. I think as people look at digital assets as a potential safe haven from some of those larger factors, I think that you will see some more momentum potentially pushing into the digital asset space. And then the third thing I would actually think about, again, as we move through stablecoins is really the financialization of digital assets. We have a very nascent ecosystem right now where digital assets are traded largely by unregulated dealers and, kind of a more of a crypto native infrastructure. StoneX is part of that, but we are moving towards a more regulated infrastructure for accessing these. And so as you see banks moving into custody, as you see global banks moving into trading, and you see global banks moving into the ecosystem, that's really going to be, generating more interest from their client base and moving that forward. And I think that's going to create a significant tailwind as we create an infrastructure that can really kind of bridge the gap between digital and traditional finance, or TradFi as we call it.